Hey, good morning, good afternoon, good evening to everybody, and thank you so much for joining us on this first of our October webinars. We have again two this month that we're focusing in on. Really, this week we're focusing in on real-world insights for DSE implementations. What does that mean? It's really taking and understanding um, how things are actually happening in the digital solutions economy space and the realities of what's going on in the marketplace. So I hope you enjoy this webcast. We have a really great panel of people to talk with you. Quick reminder, again, as always, that the webinar is being recorded. We'll have it up in YouTube as well as on our website. I encourage you, go check it out, download it, and share it with your friends. We are able, you can ask questions throughout the session. I encourage you to go ahead and do that. You can use the question panel here. We will address all your questions in the order. Again, feel free to ask it throughout. We'll try and leave a little bit of time at the end, but we'll try and answer also the questions during that. And again, I said, obviously you can download those webinars. How do you do that? Well, one of the ways you do that is go to bramasol.com. and check out our website. You can go over to the Resource Center. There's lots of great links to content here, and you can scroll down on the page just a little bit past this little section right here and check out all of our great content. You can also do that by visiting LinkedIn, our LinkedIn page. We've brought some new content on there. Encourage you to check that out. Our YouTube page, and we have, oh my goodness, probably almost 150 to 200 different audio and video sets of content that you can check out over there on all sorts of subjects around the Office of the CFO, S4HANA, et cetera. Join us on Facebook, Apple iTunes, and iHeartRadio. Subscribe to our webcasts, and you can subscribe to our podcasts. So I recommend you go ahead and do that. What I'd like to do now is I'm going to talk a little bit about the digital solutions economy, just to remind everybody and give some context of why we're having this discussion. What is this digital solutions economy? Then I'll introduce our distinguished panel of experts who are going to share some insights from projects, not only projects they're working on currently, but projects they've worked on over the past several years with implications to the subscription and digital solutions economy. And we're going to focus in on three main industries, high tech and software, medical device and life sciences, media, telecom, because they each bring some unique characteristics into that space. To remind everybody, when we talk about the digital solutions economy, which we believe is this next evolution of the subscription economy, we're all familiar with this subscription economy. In fact, we've heard about the idea now of subscription wear out. Many of us signed up for subscriptions for all kinds of different things during COVID and are paying lots of recurring fees. And now all of a sudden we're like, oh, really, am I watching all of those? But subscriptions are a unique way for businesses now to start building different models. And the idea is it's a recurring payment or regular payment in return for access to a good service or a privilege. Privilege, think of that as your gym, right? The privilege to go in there, or Apple iTunes, you can get the privilege of seeing all kinds of different content there. But we believe that this is expanded to a bunch of different models, and we're going to talk about those models in the context of some of these industries. And so I wanted to refamiliarize or establish a base. Something as a service. Pay for what you use. You can have infrastructure as a service, software as a service. SAP Rise offers business transformation as a service. You can get all kinds of things as a service today. That leads to the idea of entitlements. If you think about entitlements, when you offer or buy something, you're entitled to certain content. If you have a subscription to a media, you can get Disney Plus might be part of something. You can have Discovery Plus, all kinds of different content through different things. What am I entitled to? We have dynamic pricing models. Those are models like Uber, or even airlines, where those prices are set based on the market conditions, and we're seeing more and more places doing that. You have outcome-based models where our clients like Lexmark, HPE, and many others are offering outcome-based models based on not the use of the unit itself, but based on outcomes. How many pages do you print? How many items or space on a server do you use? Many companies are moving to this outcome-based model. We have usage and consumption models. This is particularly big, both in that space that we talked about around printers, but also in the area of medical devices, and we'll talk about that. And finally, we'll hint at, and we're starting to see lots more in the area of revenue sharing models. A revenue sharing model is a model in which something like Disney might offer a particular title through Bondi, or they might have a revenue sharing where Chewy.com offers lots of different types of pet foods, and so there's an alternate arrangement for that. Peloton has many different ways in which you can get subscriptions for them, of course, and so you have these revenue sharing models. Revenue sharing models are also examples, and we'll talk specifically about the media space in particular, where we see more and more media companies offering their services through things like Google, Apple iTunes, and others. So with that, I wanted to, again, give everybody a framework for that. We talk about this and the engagement, and one of the areas, and I'm just going to build this slide out, really is this change in the customer engagement model and how the customers want to do business. And that's all driven by the idea that the customer is in charge. They want to engage with you in their way, and whether they are anonymous or not. They want the ability to create dynamic solutions, manage those solutions, and then create commerce. And that includes not just the initial sale of a solution or a bundle, but the changes to those. And those changes can be myriad. To the bundle itself, to the billing for that bundle, etc. We have the idea of flexible delivery and fulfillment. That relates, of course, to entitlements, but also digital supply chain. How do you get those goods, or how do you get access to the digital areas? We'll talk about billing and invoicing, payments and flexible collections. We talked about that a minute ago on these revenue sharing ideas, and of course, protecting security and risk. And what you'll see and what we'll talk about is the fact that Bramasol and SAP have brought together this idea of a flexible set of offers and solutions that address all the needs around this circle that we saw previously. How do we bring commerce solutions, whether they're SAP solutions, third-party solutions? How do we allow our customers to create those bundles? What are the rules engines behind that? Supply chain and logistics, what's the fulfillment aspects? Billing and invoicing, cash and treasury and collections. And finally, revenue recognition, billing and compliance for even lessor models. And then, of course, we'll talk a bit about analytics and dashboards, because it's really that idea of insight to action that allows our customers to drive new transformative business models. So with that, I want to get into the meat of our discussion and our presentation. And what I'd like to do is take a moment to introduce our panel. First off, we have Sunil Gintella. Sunil has a tremendous amount of experience both in the SAP RAR and SAP space, as well as the SAP BRIM space. And Sunil is dealing with one of our large media customers, has worked with a number of different customers, and will be sharing some of the insights on that. So welcome, Sunil.
Thank you.
Frank Josbacher is one of our senior consultants also here at Bramasol. Frank has worked on a large number of some of our most prestigious accounts and our most prestigious projects across numerous industries, including the high-tech, media, software, currently involved in a fairly large project for us with a medical device company, and supported several of these areas. So Frank, welcome to the team.
Thank you very much, Sean.
And last but not least, Shashank Siripuram. and hopefully I got your name right this time, Shashank, but welcome to the team. Shashank is one of our also senior principal consultants. He's a senior consultant here on the team, has had great experience across a number of different projects, currently working with a very large high-tech company, integrating a recent purchase of theirs into their S/4HANA and into their RAR. But Shashank also brings tremendous experience, having worked on a number of different projects, both from a health check perspective, but also on one of our premier clients, NVIDIA, helping them understand how to integrate costs. And we'll talk a little bit about his experience. So Shashank, thank you, and thank you for joining us, and welcome.
Thanks, John.
So as part of this, we came up with, as a team, we went through all of the different ideas that we had, and we came up with some key themes that we want people to think about and walk away with. And we'll talk about these in the context of these three industries. And those themes are around the idea of the basic building blocks of revenue accounting and the subscription economy, which are these ideas of contracts, multiple element arrangements, MEAs, and POBs, or performance obligations. And what are the influences, and how are those different, and how are they similar industry to industry? One of the items that we see a lot of, and we're seeing increasing, as you can imagine, as you begin to allow customers to choose the dates by which they want to be billed, choose how they want to receive things, change and modify their existing relationships and contracts. You see a lot around combinations and modifications, both businesses as well as individuals, in a direct-to-consumer model. And we'll talk about those. I mentioned reporting, analytics, and insights. At the end of the day, this is as much about providing businesses and providing individuals in those businesses with the information and insights they need to better improve their models. One of our customers is using these insights and these tools to accelerate their go-to-market strategies and their go-to-market models and offers. I'm really looking to reduce those go-to-market plans from months to days and weeks to get offers and markets tested and into the market and in front of consumers. What we also see is, as much as we would like to see customers use an entire SAP model, integrations are crucial, and how you manage and handle those integrations with third-party products, with other SAP products, excuse me, and others will also be a topic that we'll hit. I also want to mention a lens. We're going to use this lens, this idea of volume, velocity, density, and complexity to frame this as well. So when you think of these four dimensions, if you will, volume, what's the number of different transactions that we're talking about, or what's the volume of data that we're talking about here? And of course, it varies across the board. We'll do that. When I mention velocity, I'm really talking about frequency, recency. You know, we all know that velocity is about speed in a direction, but think of this as speed in a direction. Think of it as volume, throughput, and we'll talk about the importance of that. Differentiate between density and complexity. Complexity is really how complex are these arrangements. Many of our arrangements that we do are very simple. They're two items, a product and a service, or a product and a warranty. But some others are extremely complex, nested elements that might have a child, a parent, and a grandchild or grandparent relationship. Some of them have multiple business unit relationships, lots of complexity to them in terms of that. They may involve complexity across the different types of POB types, event-based, time-based, percent of complete, et cetera. And density is another dimension to that, which is you can have complex, but not very dense, and then you can have dense and complex. How many different elements are in there? And you can imagine that you know, companies like Apple, Google, and others with whom we've worked have extremely complex and extremely dense. Imagine the numbers of transactions and the numbers of contracts that can be related to an individual element. So with that frame in mind, what I'm going to do is we'll move to our first industry. And I think it's an easy one for all of us on this group to think about. It's high tech and software. And of course, this idea of the subscription industry or subscription economy has had, and solution economy has had a big effect on the high tech industry. And we talk about this idea, and we'll focus on complex bundles with software and hardware. We see complicated order to cash processes with multiple sources of data, and then complex cross business unit metrics as well. So with that, I'm going to ask Shashank, I'm going to kick off with you for this first one. So Shashank, you're involved with a fairly high-tech organization. Talk a little bit about this idea of, what are we seeing in terms of the complexity of these bundles with software, hardware, and those aspects, and how are you handling that?
Yeah, yes, John, thanks. So basically, what I've seen in this high-tech industry with respect to the product bundles is, we do have, different hardware subscription and support, perpetual license. These are all different services they try to sell as part of the same bundle, in which the billing happens at, sometimes at the parent level and the child level. So which is something, a little bit complex to understand in RAR and, do the fulfillments and revenue recognition. So we have fairly used the RAR, tools, different fulfillment events, and enhance the portion of this complexity to derive the revenue expectations for the customers. And also in one of my projects, I've seen a typical complex requirement where the POB, the performance obligation, should be generated by invoice, not by the regular sales order. So like the invoice normally derives the POBs and does the fulfillments. That is a kind of a typical requirement that I have seen at one of our high-tech clients in the past, where the invoice happens directly at the parent level, but ideally the performance obligations as per the FASB rules are expected to be generated at the child items. So that was kind of a scenario I've seen. And apart from that, at one of my other high-tech projects, I've seen that these bundles are normally sold and categorized in different cases like add-on bundles and ramp-up models and upgrades, wherein the revenue recognition model and the revenue amortization timeline entirely changes from bundle to bundle. However, all these will be part of the same provider contract or same solution quotation or subscription order from the BRIM.
Right, yeah, and you've been doing a lot with BRIM. And speaking of BRIM, I know, Sunil, you've had a lot of experience, both in the current project you're working for, as well as some projects you've done before with Lexmark and other customers like that. How is this idea of subscription or solution order management affecting the way they think about and look at the RAR process? You and I talked the other day about multiple approaches to this concept, and in particular, we're seeing, again, maybe you can add some flavor to this from a lessor perspective.
Yeah, sure. So I just want to first of all add on what Shashank has said. The one is the complexity of the solution, and then on top of it, you have to handle for, like, when you build it, you focus primarily on how you are going to create your form your RA contract and how you are going to recognize revenue. Of course, the groundwork needs to be done as far as your provider contracts or provider orders, how you build them and how you are bundling there in the first place. But the other challenge, which sometimes gets does not get enough importance, is how are you handling the changes, and that's where it becomes really tricky, in handling changes, like how many times will a contract undergo changes over the duration of its lifetime, and how are the accounting rules determining how these changes should be treated going forward. So one should focus a bit on getting clarity there and try to build the solution around what can be achieved, because sometimes, in the essence of getting everything into SAP, you might want to build a lot of rules in trying to achieve what accounting requirement is. But certain things, sometimes you can go back to your auditors and you can say that, hey, this is something which is a systematic limitation, so we'll have to deal with this in some other way, and that may still be acceptable to the auditor. So one has to focus on not only the technical solution, but also how you can account for the complexity and take that as a way out of the solution, and then say that it's not possible to build it, and then use some other ways. I mean, there could be alternative ways of doing it, and focus on that. The key I'm trying to say here is keep the solution simple. Already with Brim and high volume, we are dealing with lots of data, and there are enough challenges coming in because of the volume. And on top of it, if the solution is also complex, you are making your life that much more cumbersome. So try to keep that simple, account for these changes, and then make sure that whatever product you are designing, whatever solution you are designing, that's a viable solution and it's scalable.
That's a great comment, and maybe Frank, you can comment on that based on your work that you've done with a number of different organizations. That idea of this complexity and changes to to the combinations, modifications, etc.
Well, the piece that I'd like to point out is that there are some situations where renting software is as important as selling it, on the premise that indeed you have hardware that is being leased or rented by the client, and the software that goes with that shouldn't have a permanent license with it, but rather a temporary or a as used license. So not only should one have an offering for a permanent license, but also a time-based one.
Mm-hmm, mm-hmm. And how do you, so from that perspective, thinking about the solutions and what we tell our clients and how to approach that, what do you recommend? How do you help them think differently about that, Frank?
That's you challenge me on how to think myself differently. No, we tried to explain what the alternatives are, and again, it's up to them literally to arrange their materials and their offerings, their SKUs accordingly, so that they can indeed be properly aligned.
Right, exactly, and then you kind of got to what I was saying, and I want to share that. Maybe ask Shashank to and Sunil to comment on that too, which is that connection. I think people see a tenuous connection in some cases from revenue recognition. Why is it, and how is it that revenue recognition is so integrally tied to those front end aspects of the digital solutions economy? You talked about the rules engine, Sunil, of creating bundles. And then, of course, in order to create those bundles and do it in a dynamic way and be able to recognize the revenue appropriately, what do you usually advise customers to think about? And you talked about simplicity. I'm sure that's one aspect. What else do you advise them to think about?
Yeah, I mean, the different options they have. I mean, for example, do you have you talked about it a little bit earlier. I didn't answer to that, but the leases part, how are you building your leases? And that's another critical piece, especially, I mean, if somebody has been using RAR already, the way SAP has evolved over time in providing a solution for leasing has changed. Like somebody using SAP like 3 years back, SAP RAR at that point compared to what we have today, there's a lot of different. So look at what is being offered by SAP as a solution and try to adapt or make changes to your design. I mean, you cannot stick to your old design. It's easy to say this. I know you may be thinking, hey, with such a high volume, is that even feasible? But if you have to, there are two ways of looking at it, right? Use my existing design and try to cope up with all the challenges I'm facing there, or use the new tool being provided, being offered by SAP, and see how can I move from my existing design to the new design. There's a challenge, but this is the trade-off you have to take, and then see which one is a better option. And in my opinion, moving to this new offering, because there are advanced improvements made in that tool, it makes probably sense to go with this new tool rather than trying to stick to the old design.
Absolutely, absolutely. Shashank, you've often had to get involved in the process of integrating costs because many of the different models here are cost-based. Can you talk about, some of the challenges you see there?
Yeah, so cost is really interesting piece in RAR, like how it supports. And as Sunil mentioned, this is one of the key features that has been evolved over the time with the RAR versions. So like, yeah, normally when we handle the percentage of completion scenarios within RAR for revenue recognition, so these scenarios are normally, requires cost as a base to calculate the percentage of completion. Like to be specific, I had a requirement at one of the clients, which is non-recurring engineering projects, where this project goes on for several months and it has its own allocated budget and plan and actual cost, and the percentage of completion will be calculated based on what we have initially planned and what is actually incurring every month. So that is a key item to derive our percentage of completion. At the same time, so standard SAP has certain limitations in recognizing the revenue along with the recognizing the cost along with the revenue with respect to this percentage of completion. But we have developed our own tools to utilize this cost portion and recognize the cost accordingly to derive the profitability of the specific project or for the performance obligations. We also thereby transferred this cost portion to profitability analysis. There is a module called COPA in SAP, so which can be eventually used to analyze both the cost and revenue associated with that project, and also with that allocation effect, because whatever you normally incur the revenue from invoice or cost from the project systems or any other module is not your direct cost. It will be allocated, and the allocated revenue is what we need to report to the street, and we have to develop our profitability reports based on that. So this was one of the interesting topic that I handled in my previous projects.
Yeah, and I know, both Frank and Sunil and others on the team, unfortunately, Prasad couldn't join us. He had a customer issue. But we talked about this with Prasad yesterday as we in a lead up where several of our customers have had this combination or this interesting combination of multiple POBs of different types and the percent of complete, and how do you integrate that, whether it's through just costs, COPA and costs that way, or integration with tools like SAP project systems. And I can certainly foresee an upcoming webinar. We did one a while back, but I think the world has changed with regard to that, so we'll focus on that as well. Before we move out of high tech, I do want to just mention that we're seeing more and more of this multi-element arrangements and all of these in industries previously not thought of as that kind of a business. And those relate primarily to areas like semiconductors. And maybe Shashank, you can talk a little bit, but as we think of companies out there, whether it's Intel or Amcor or NVIDIA, where those chips are not just chips, but they're software driven, and there's a software licensing capacity to it, and you can upgrade your software. We see a lot of different changes there as well. And I know, Shashank, you worked on NVIDIA. Was that a consideration for them as well?
Yeah, so that was a consideration. So normally, all the semiconductor businesses, they would try to sell software along with the actual hardware, like in terms of the perpetual license or subscription agreements or support services. So all these will be part of the bundles, like how they wanted to sell their bundles. And as I mentioned earlier, like the typical challenge that we have seen in this area is the billing. So normally we can set up the performance obligations based on the how the bundle structure has been maintained in the system. However, when it comes to RAR, the revenue recognition has certain rules that normally subscription and services, these will be time based, and each has some unique requirement, like the revenue should not be recognized for the time based until the invoice happens. So in which we have to wait until that event happens, and we have to define the BRF rules in the system accordingly, which support this specific bundle scenario. But otherwise, normally this semiconductor industry or a high-tech industry, most of their business is happening through bundles, wherein it is very peculiar scenario to we have observed in regards to RAR. John.
Yeah, and we're going to talk about media at the end, and we'll spend some time talking about royalties and licensing and stuff like that. But as you think of the licensing, when they're built into, Intel Inside, I play games and I have a gaming computer, and so I'll see an NVIDIA symbol up there, and of course there's licensing and royalties. This is a picture up here, by the way, of the world's fastest computer. Why did I put this up here? Because nobody actually uses this computer all by themselves. This computer is rented out, and you rent out space. One of our clients, VMware, that's what they do, right? They create tools to allow you to create virtual machines and rent space for a time period. Think of that in terms of changing computing as a service, right? We talked about things as a service, so that ongoing evolution. With that in mind, what we'll do is we're going to move to the next industry area. And it's really an industry area, I think, that has begun to make significant changes in the way that they address and look at the world today. And this is not, very true of a number of different customers that we've had over time, and they include, this happens to be Nova Biomed, but we've also done work with companies like Terumo, Hillrom, and Amgen and many others in the life sciences space. And we've seen a migration or an evolution of a couple of different things. And I'd like to focus attention in when we think of, go back to the bundles, go back to the different business models. But one thing that we're seeing, and Frank, I'm going to ask you to kind of lead off the discussion in a moment about the complex lessor and rental models. And the idea that they move away from a traditional, here's Welch Allen, for example, they have a whole cadre of things, including otoscopes and others, where you lease the item, but it's a consumption-based model around that possibly. We have complex structures with engineer to order and make to order, whether they're complex instruments like this, complex instruments like Siemens produces in their Healthineers business or others, and what are the implications of that? And of course, then finally, integration of the services. So Frank, from your perspective, what are you seeing in terms of these lessor and rental models and the implications from RAR into the finance aspects, but also just the basic bundling and fulfillment models?
Well, this gets us directly into the multi-element arrangement situation, because if I have a particular instrument that isn't usable by itself and it requires additional ingredients, whether it be a software or actual material to be used, depending on how I sell the entire engagement to the customer, depending on how much that instrument is actually used based on the other ingredients. That's the revenue that can be recognized against it. So again, the separation of the materials is one thing, and then allowing one to be, shall I say, funded by the other. I guess that goes back to the razor and blade kind of scenario, where in a very simplistic manner, okay, the blade is, the razor is rented to the customer, but it really is then, shall I say, funded by the use of or the sale of blades.
That's a great.
So
I
one
love
may
that.
be free, and ultimately its revenue is recognized by its respective share of the value.
Maybe you can talk for a moment about, so we know, that's in the razor blade model, that's a pretty straightforward model. But if you go back to a couple of these, think of these instrument models here, and we know of another customer that we dealt with. You rented the item, you rent this particular instrument, or they lease the instrument. And I want to talk about two things. The first one I want to talk about is the I'll call it the related to variable consideration and the model there. And what I mean by that is, and I'll ask maybe Shashank also to comment, because he worked on some of the health checks around some of these, is often we will lease the instrument for a price with the assumption that that organization will purchase a specific amount of consumables, reagents, tests, disposable pieces, whatever those consumables are, but those pricing for those consumables is also tiered and can be variable. How, Frank, how is that affected, and what are some of the issues? We think of these customers who have a separate ordering place for that as well, so that further complicates how you tie this all together.
Right, so it's important ultimately to be able to get the ordering information back to the original sale item, and then allowing that in our case to flow into the revenue accounting and reporting module for RevRec. But ultimately it's tying these data streams together and linked to the original sales order line items.
So Shashank, I know you've seen some of these models too. What are your thoughts?
Yeah, so this consumables is a very peculiar scenario in this medical device industry, especially at Nova Bio. I personally seen. So as Frank mentioned, so they will most of the time there will be a holding master contract, and the master contract will just tell that like how many pieces of it. It won't specifically talk about what actual consumables are going to be, but they will create subsequent call off release orders in which the actual consumable item that we are going to sell is going to be maintained. So this is something be handled in RAR by maintaining the call off release functionality, and this is very common scenario that happened in this biomedical industry which I work, and RAR supports this scenario very much intact without having any issue. The good thing is, in the migration, when you have to migrate all the legacy contracts, so even RAR was fine enough to connect all the dots between the master contract and the call off orders from the historical data to migrate into RAR as expected, with all the fulfillments and the quantities, revenue and billing information.
Sure. And maybe you can talk to, and Frank, hopefully you got cut off there for a second, but we can talk about these ideas of these complex structures also. What's very interesting to see is the diversity, very similar to the high-tech world, these diversity of scenarios and how you need to link it to the upstream. And when I think of, our customer that we're working with, where they do contract manufacturing for pharmaceutical companies, and most of what they do is engineer to order or make to order, and certainly for the more sophisticated test device and medical device companies and life sciences, that's true. And how does that have an effect on revenue accounting? But not only revenue accounting, but thinking of it in terms of an ecosystem. Frank? Frank, you're still on mute. All right, Frank might be having some audio challenges. So Shashank, I want to just turn to you real quick and say, from your experience on these engineer to order, make to order scenarios, so many times it's all downstream. We get involved and they say, oh, you're the rev rec guys, but that's not true. There's a lot more to that upstream from a professional, from a services, a project systems, an engineer to order perspective, right?
Yeah, so basically in this engineer to order and make to order, these are the typical manufacturing processes wherein it has some prerequisites of initiating the production process, or resource gathering, material requirement plan, things like that. So with respect to RAR, if you have to speak, so there will not be any specific impact with RAR, revenue recognition. However, like we do have an option of considering this particular sales order, or whatever the cost object in the engineering to order. So we can consider that to update on the performance obligation level and carry out the percentage of completion scenario. So that is an option that SAP gives, as it is an integrated tool. And like the project system, how we use the WBS element to recognize the revenue based on percentage of completion. So we can leverage that functionality from this ETO or MTO. But apart from that, there are not any specific relevance with these type of manufacturing process with the revenue recognition.
Yeah, and I think, and maybe, I don't know, Sunil, if I know you've done a lot, so I'm going to give you an opportunity to comment also, but this is an example we talked about earlier on, these lenses of volume, velocity, density, and complexity. Here's an example in some of these cases where you may only have 10 to 15 different contracts, quote unquote, at any particular time, but the complexity and density of those contracts is significant, right? Because essentially I'm delivering some outcomes. If I'm making a device, a small medical device, or I'm manufacturing pills, or I'm manufacturing other things in a contract manufacturing or a contracted manufacturing outsourcing process, right? So Sunil, what has been, did you see that as well?
Yeah, I don't have much exposure to this, but I can talk a little bit about it. I mean, the complexity, I mean, we're talking both the operational side and the revenue accounting side. So the complexity goes away a little bit from a revenue accounting standpoint. Once that bundling is taken care of, you are fine. The volume is not so high, you can handle it. But the complexity gets on more onto the operational side. How are you able to quote to your customer on time in an engineer to order or a make to order scenario? How can you build your product so that you are able to generate a price quote within the shortest possible time? And how are you and again, for a multi-element arrangement, how are you going to estimate your consumptions over the duration of the contract, right? Let's say the life of this particular machine is 3 years, and how do you estimate your usage of whatever consumables are being consumed on that particular machine? How do you estimate that? And finally tie back the revenue to a particular machine level. That is the biggest challenge. You want to track revenues at an equipment level, and how you are going to get all of this streamlined. I mean, yeah, there are different tools. If you are using Brim, you can do this bundling, and you could get that level of detail which you are interested in. Or if you are using only SD as a solution, what are the challenges? There are different kind of challenges to handle there. But this industry as such, there is less complexity on the RAR side, but more on the operations side, I guess.
Yeah, no, that's a great point, and it's so important because if you don't deal with things on the operations side, you could add to your headaches of manual interventions and workarounds and other things that you'd have to do downstream, whether it's the actual revenue accounting or the operational accounting or others. So absolutely, and of
Yeah.
course we have integration of services in that too, right?
Especially with volume, the equation changes. I mean, if we were to talk about media or subscription, where a lot of companies are going towards subscription,
Yeah. So
and you're talking about like,
well, let's dive into that. That's a great segue, right?
Okay, yeah, let's talk about a little bit of that. Yeah, go ahead,
Yeah,
John.
so what you're exactly seeing is like spot on, in the media and telecom, and where we're seeing this tremendous variation is in the media and telecom space, and we expand media and telecom. That includes so many different elements um, of a space. Media we think of traditionally, can be everything from, um, R.R. Donnelley and Wiley and Sons and all of those companies that provide actual physical media or pseudo media to companies that that you're familiar with and we're all familiar with, like Discovery, Netflix, and many others like that, as well as then the telecom industry, and then this overlap of a company that offers the complete gamut of cable, internet, and telco services. So one of the things we'll talk about as we work through this is volume velocity, or volume and frequency, volume velocity, complexity, but also then maybe we'll wrap up towards the end on this implications of alternate channels, pay methods, and the in-app purchases. So maybe you can kind of give a perspective from your view on, Sunil, on the media space and the implications.
Sure. So what we are seeing is, I mean, almost everyone is into subscription nowadays. I mean, it started a few years back, and everyone is offering subscription, direct to consumer subscriptions. And there are also partners. So there are two key things: is your own customers, where you are billing the customers, you are responsible for the monetization, and you have partners where you are not responsible for the monetization, but they are. So there are revenue sharing models. So for example, you have partners like Verizon. You subscribe to their data talk text plan, and they give you 1 month of Disney Plus bundle, 1 year of Disney Plus bundle free. You subscribe to T-Mobile, they give you Netflix 1 year free, or whatever that may be. So it depends on which side you are. You are implementing this SAP for Verizon, let's say, and then how are you setting up your partner sharing agreements? How are you sharing the revenues with the partners? Or if you are on the other side, like if you are Disney, how you are provisioning for these subscriptions which are from the affiliate partners, and how you are recognizing revenues for those, because you are not responsible for monetization, but ultimately you want to see the revenue in your system, how you are accounting for those. This is one model. And of course, direct to consumer, where you are responsible for monetization. And then there are also in-app purchases, like Apple. You subscribe to Apple, and then Apple is billing you on a periodic basis, monthly or yearly, for the subscriptions, or Google is doing that for you. And then this similar kind of arrangements with your partners again. There are multiple partners involved, and how you are sharing the revenues with the partners. Ultimately, the end result is, how are we going to get back to the right analytics? So we need to make sure that all these models, whatever we design in the system, give us the necessary inputs that feed into a business warehouse system to get to the right kind of reporting. you know. And then the integrations, I mean, when we talk about the partners, sometimes you will have to get certain data from the partners to reconcile the data with like how many subscriptions you have versus how many the partner is saying that you have. So how do you reconcile that information? So you may have to build interfaces with the partners. Like most of the partners today offer APIs, or they are giving you files where you can do a secure FTP to download those files, and you may have to build some processes in your systems to
Right.
to use those files and reconcile the data, right? So that's one area. And the other thing I want to talk about is volume here, especially if you are into media. Uh, Even if we were to say, like, I have 30 million subscribers, we are talking about uh, uh, creating those many invoices every month, which is like huge. We are talking creating about those many RA contracts, those many performance obligations. How are you processing these invoices every month? How are you processing these RISE every month? The important thing is that we need to complete processing of all these transactions on time, so that we are able to close the books on time, especially the period end, the quarter end. Those become very critical for us. I want to spend a little bit time. I know we are running short on time, but
Okay.
spend a little bit about volume. Two key things on volume. What I would like to stress on is availability of system resources for processing the volume. So system resources is, do I have enough bandwidth from a hardware? Do I have the enough sizing there? Which normally everybody does. Before you go live with SAP, or when you plan your SAP project, you are planning for. There are tools provided by SAP, so you know your sizing. But I want to go a little bit into next step, saying that, do I need dedicated app servers for processing this high volume business? So if you are a company who's having both high volume business and another business division, probably you may need dedicated servers, app servers for processing this high volume business. And you may need only more background processes than dialogue processes on these app servers. So planning around these kind of things, and probably you can have more memory allocated to these high volume business app servers and then the other app servers. So how do you plan that out? You have to go to that level of planning to make sure that the availability of system resources is taken care of. And the second point is understanding parallelization, limitations, dependencies within SAP. So what I mean by this is, a lot of SAP processes, SAP by default provides parallelization, right? Sometimes you may have to build parallelization. So you may have to trigger multiple jobs. If SAP doesn't provide you a scope to use parallelization, you will have to do it yourself. So you will, instead of SAP triggering 10 child jobs, you may have to trigger 10 parent jobs yourself, right? So how do you build on that parallelization? And then understand the limitations. So certain things, when you are running certain process, you cannot do process B. When you're running process A, you cannot do process B. For example, you are using BRIM as a solution, and you have a invoicing job running for the customer. So all the business partners are logged in that invoicing job. At the same time, you cannot trigger a job to transfer all the FICA invoices from all the RISE from FICA to RAR, because the business partners are logged. Or another example is, you have a job running for transferring RISE from raw to processable within a company code, and you cannot have another job to process the RISE because the sub areas are logged. So understanding these limitations, like how SAP has a technical limitations there, but you have to understand this when planning your scheduling of jobs. And then the other point is dependencies. Like if you are doing a RAR posting run, you have to do posting job A, B, C, one after the other. Those are simple, but there'll be other things to ensure data integrity or the process integrity. You will have to make sure that you schedule certain jobs in a certain way. So these are some of the challenges, I would say, in this space.
Yeah, and I'm going to ask you to comment, and then I'll ask, I don't know if Frank was able to come back, or we can ask Shashank to comment. But you and I we talked the other day about contract combinations and modifications, and you had an interesting perspective on that, and the way one of the clients is doing it. I talked about the fact that we have a particular client who sells home management, home security systems, and they see a high volume, 1.2 million. It's not 10 million, but it's 1.2 million invoices and transactions every month. But because they allow their customers to create their own bundles, upsell, cross-sell, or modify payment dates, they've seen an increase in contract combinations, permutations, modifications. And I had asked you about that relative to the client you're working on now. And you had an unique statement about that. Maybe you can share that with the audience.
Yeah. So how are we treating these upgrades, for example? How each customer is treating this upgrade. So for one company may say that an upgrade is a same subscription, and I'm treating this adding on to that subscription, or so it's all one revenue accounting contract for me. The other way of looking at it is this subscription has ended because there's an upgrade. Now I end that subscription and I start a new subscription. So I have two different accounting contracts because my old contract has ended, my new contract has started. So how you design the solution is very critical here, because that will determine the complexity of the solution. And again, I keep saying this, whenever we talk about high volume business, the simpler the solution, the better it is over the long run. Trying to accommodate everything into one contract and build and rules around contract modifications and see whether I should treat it as prospective change, retrospective change, so many other things of revenue accounting requirements there. But you can also argue that my contract has ended and this is a new contract. That's also one way of looking at it, right? So those play a key role.
Absolutely. And unfortunately, Shashank had to drop. I would have had Frank, any final comments before we wrap up? I know we're running a little bit long, so I apologize to you guys for that. I don't know if we're able to hear Frank. There he is.
Sorry, John. There was one thing I did want to add earlier, and that has to do with when products, materials are rented, they may need support or services associated with that. The support may in fact be sold again on a no-cost basis. Yet again, because of the multi-element arrangement, they need to earn their respective revenue. So on the one hand, you may have the hardware being rented, the software being rented, the inputs being provided, plus the support, all of which needs to be split out, but all of which is funded then by the inputs being sold.
Yeah. That's a great point, and we're going to wrap up because we could talk about some of these topics forever, and it I'm fascinated by it. But another one that's spot on for that, and we'll wrap up, is around the idea of add, no ads, and maybe we'll dive into some more of those topics. So Frank, everybody, thank you so much for your time. I appreciate what you guys brought to the table. As we wrap up, let's remember we've got these new business models that require us to be flexible, scalable, and have a dynamic infrastructure and be thoughtful. Analytics, insights, and planning are crucial. Integrations can be complex, so make sure that you're doing planning up front and that you're engaging with a partner like Bramasol who understands the implications of all that. So I want to thank everybody for attending. I want to thank Frank, Sunil, and Shashank for their participation and support throughout this process. Hopefully all of you found this really insightful. I know I did throughout the process, and I look forward to our next webinar on the 28th, where we'll be talking about S/4HANA migration and RAR. So everybody, thank you again. I want to wish you all a fantastic day, and as my good friend Niraj says, make it a great day.